Morning, everyone. I hope we're all well. Thank you so much for joining us this morning. Thank you so much as well to our guest speaker, that's Mr. Kayode Omoshebi. I think we can start. Yes, okay, let's go ahead and start. If I can manage to move the screen. Okay, so welcome everyone to this quarter's SME Clinic. We're so happy that you could join us today. As you can see on the screen, I hope this is not blocking anyone. As you can also see on the screen, today's topic is business and politics, specifically how to navigate in a new administration, specifically how to take advantage of opportunities whilst mitigating some of the challenges that businesses are sure to face during this transition period. Oh, goodness. Okay, so just to talk a little bit more about Pearl Mutual before we continue. Pearl Mutual is a financial advisory firm. We are based in Lagos, and yes, so we are based in Lagos, and we have been since 2012, which is when we first started operating. Since then, we have added on several services under our main three service offerings, which is capital raising for SMEs and for project financing, financial advisory services, as well as executive training services, which we do offer to organizations, individuals as well, business professionals as well. We are registered with the SEC, that is the Securities and Exchange Commission of Nigeria, as corporate investment advisors. And we are a business development service provider to BOI, that's Bank of Industries in Nigeria. We do have experience working as technical partners with USAID under the West African Trade and Investment Hub, and as well as experience working with AGRA, that is another USAID branch. So I think now we can move on with the introduction for our guest speaker, who we are so happy to have joining us. So I will be sharing my screen again, just to introduce him as well. Okay. So, okay, so Mr. Kayode is a top-rated investment and business expert. He has hands-on experience in corporate finance, investment research, and generally just doing business in Africa. He recently led the investment banking division of assets and resource management to raise over $4 billion in capital for corporate organization, various projects, as well as subnationals. He's also the co-founder and CEO at Cedar and Ash Capital. He is a top-ranked economist and investment analyst, and was once a top 3 analyst in top listed companies in the banking and energy sectors in Nigeria, according to Bloomberg Intelligence. He has also led the research team of the largest non-bank financial institution in Nigeria with assets worth over 1 trillion naira, and was a pension fund manager with an AUM of over 500 billion naira. So we're so grateful that you could join us today, sir, and take some time out of your day to educate us a little bit on this area. So I will at this point stop sharing my screen, and then I will allow Mr. Kaede to go ahead. I hope you're able to share your screen, sir. Welcome.
Thanks so much for the introduction. I do appreciate it. Let me share my screen. I don't know if it's clear for everyone.
Yes.
And as I'm sliding through, is it clear?
It's still on the first slide. I don't know if you can put the PowerPoint in presentation mode.
Yeah, it's on presentation mode. I don't know if it's moving.
Yes, we can see it moving, but we're seeing it in editing mode.
Okay, so let me open. Apologies. Okay, I don't know if it's clear now.
Yes, it is. Thank you. Sorry, just before we start, just a reminder to everyone in the session that if you have any questions throughout the presentation, please just leave them in the chat and then we will address them and read all the questions out during the Q&A session. Thank you.
Thank you. Okay, I just to be sure, am I sliding through? Is it going?
Yes, we can see it. Yes, okay. It is.
All right then. Good morning, everyone, and thanks for the time. I'll be quite, well, I call it granular, so that I don't bore everyone with the points. I'm happy to be on this call, and I think the discussion really is around the impact of the government and the politics on the economy, and also how it affects business. And so before we delve into policies and impact, I mean, it's just to look around what are the key issues that the government would have to work on. I mean, because it's not a fresh country. I mean, so you've met challenges, and really the key issue is about how you want to navigate around it. And it's tied around government finances, foreign exchange, and economy. And these are the key areas: the subsidy, you have the debt picture, you have revenue, inflation, foreign investments, the growth interest rates, energy and infrastructure, and how this affects the economy. So I'll speak first in terms of growth. I mean, what has happened over the last couple of months. Growth picture has also been down. I mean, we've been struggling to go above, 1-2% as a country over the last couple of years from COVID, where we've been trying to recover. And if you look at non-oil sector growth, I mean, from first quarter last year, it's come down and all the way below 4%. The impact of the cash scarcity sort of affected the economic picture, particularly for non-oil sector, manufacturing and services, and that drove the picture much more worse. And then when you look at it in terms of inflation too, it also affected inflation and FX. So if you look at inflation, went above 20%, and then the premium between the official and parallel markets so expanded to about 65%. What happens to inflation from a, economic standpoint? It took the cost of a lot of key commodities way higher. And so what we saw first 5 months of 2023, 4 million more Nigerians were pushed into poverty level from where we were at the start of the year. And if I just looked at from MBS, what were the key commodities? The cost of a tuber of 1,000 naira would have bought you for yam, bread, and kerosene is lower from April last year compared to this year. And that sort of impacts on cost of living. Then FX, like we said, we're having that issue. The premium was about 63% between the official and the parallel market. And that alone would just drive speculation and arbitrage. We had about 6 FX markets or rates from 450 all the way to 700 plus. And then the revenue picture also was also weak. We had revenue that was about 7% of GDP. Non-oil revenue, even though it grew, the key problem was still the oil revenue that sort of found its way because of production and theft, crude oil theft, that has impacted on revenue for a big problem, a big picture. But the real problem with our fiscal stand is really about debt. As at last year, end of last year, debt service was already close to 100% of revenue. So that means for every 100 naira the government earns, you're spending about 95 naira on interest payments. And that was coming from about 81 naira in 2022. And so your total debt was already 3 times, about 44 trillion. And the big problem was where is this debt coming from? And so we look at it, the government there was domestic borrowing, external borrowing was low, obviously because of the sentiment around Nigeria. And so the government had to rely on a very big source, which was the CBN Ways and Means, and they shot that significantly by over 7 trillion. And that put us in a more precarious position because the CBN Ways and Means is a short-term borrowing. So at every 1 year, you have to roll over that borrowing, and then the interest on it, looking at inflation, because it marks what the monetary policy rate was, has put the government in a big picture. And then the key thing that then becomes the alarming case was subsidy. Subsidy was around 1.6 trillion from 2021, which was 1.5 trillion. It has moved to about 6 trillion. We're expecting to be to 6 trillion this year. Prior to when they removed subsidy, was about 4 point something trillion last year. And what was concerning about subsidy, which is where we think it's also important why the removal of subsidy is, I would say a good step in the right direction, though how it's being implemented becomes a very key issue, is the what do you call the who are you subsidizing? And so look at the figures, you realize that sorry, I'm trying to move these things that keep popping up. So the figure shows that the subsidy bill, the people who are meant to be subsidized were getting about 4 times less subsidized than the rich. So Southwest, for example, for the first quarter, you have subsidy bill of 456 billion, and then you have the poor region, which is Northeast, subsidy of 11 billion. So what it means is that the government is actually subsidizing those that it shouldn't be subsidize, and then that sort of eats into the revenue picture for the government, because what they were doing was they swap crude oil for petrol at the price in which they want to sell it in the country, and so they were losing a lot of value on the revenue side. And the little they now have, they have to use the service debt, and so they were in a very a very worse position entering into the government. So now we're in a new administration, and the question really is, how do they want to fix the challenges that they met on ground? And so, they've been able to guide us in terms of what their policy direction is about. The high areas were unemployment, infrastructure, security, labor, consumer and manufacturing. And the picture is to double the economy achieve 7% GDP growth, lift 100 million people out of poverty, generate 50 million jobs, deliver inclusive growth. And then the question will be, is this really sustainable or is it really possible? Yeah, they give a very good plan around how they intend to do it. The areas I've highlighted in yellow are the ones that we think they've implemented. Let me don't say executed, but they've sort of implemented some of them. So they've announced removal of subsidy. There's been a lot of implementations on tax. They've also unified the exchange rate. They've resolved the cash shortage. And so the other parts in green are still 12 months plan that they intend to implement. But then let's not forget that part of what they're doing now is really announcements. In terms of execution, not much has been done around it, apart from maybe the FX market, which is almost like, all is just due to change the structure. So the devil is in details, and how well they're able to execute it will determine what the impact will be on the economy and business. They gave quick action plans on the fiscal side: address oil theft, take out subsidy, rationalize government assets, deepen tax collections, improve operating expenditure, and then unlock the solid mineral sector. Monetary policy is to unify exchange rates, and they want to review CBN's balance sheet and also transform Nigeria into a very good trading system. They're focused on industry, and typical guys is grow your non-oil exports, attract FDI instead of foreign direct investment instead of foreign portfolio investment, and also drive reforms. And capital markets, just to also encourage more investment in the country, special bonds, structured products, and retail products, protect shareholders, and also improve regulations on commodity exchange and also non-banking regulations. So they made few steps already. We've seen the removal of subsidy, which bodes well in terms of fiscal revenues. Revenues would, from what we expect to see, is that alone reduces the burden and then improves the fiscal picture for the government. So that translates into more oil receipts or more income for the federal government or FAC. And that alone would impact on FX supply one, and also impact on the revenues that attributes to the federal government, the state government, and the local government. So before the removal of subsidy, I think average FAC that goes to some states, or if we say average FAC that goes to states, will be about 300 to 400 billion. We're expecting that to start going to about 800 billion. It's good for business, because what it means is a lot of states, apart from Lagos and some core urban states, rely on government. If you look at it, some states, 70% of their entire workforce is civil servants. And if those guys can get paid their pension and arrears and salaries, you see that impact on consumer demand in those states. States like Osun State, states like Bayelsa have a large portion of their work population who are civil servants. And so once you see that improvement in the state finances, that alone bodes well for consumer demand and business activities in those states. What have they done for FX? They've unified the market. Before, you had four official windows, all has been merged into one. Before, the government government-related transactions were about 2% of the market. And what they've done is to operationalize it. They've removed the Naira for dollar scheme. And now, so you can change your dollars at the bank. You can bring in dollars and just change with the bank. Price discovery, so the CBN doesn't set price by trying to be the major buyer or major seller. So they just sort of match willing buyer and willing seller together. And you now have transparency in the FX market because rates are now sort of market determined as against what we have as invisible hands. Now, the first question before we go into the outlook and what impacts on business is to say most of these policies that have been implemented so far, and what will be the impact on the economy. And we have to start from the macros. Inflation. Yes, PMS, FX policy naturally will impact on inflation. But the thing with that is that let's not forget that what we're just seeing is the official market going into the level of the parallel market. Most of us, or the typical consumer demand, are sort of being around the 700 rate. It's only the guys who are who could get FX at the official market that were enjoying that rate. So in terms of pass through to consumers, it's not going to be as significant as what you will see, except we start to see rates move to 1,000, which for certain reasons, which I will explain later, it's quite unlikely. And so once you see that, we don't think that the inflationary pressure from FX will be very significant over time, particularly in terms of impact on domestic prices. I think inflation will be the key impact on domestic. Energy will be the key impact on domestic prices than FX for this year. Now, we look at inflation and what's expected for growth, and the estimate from World Bank, which we would rely on, is about a slight improvement in terms of the growth picture because of the removal of subsidy, and also but inflation is going to be higher this year, and that's because of energy. Energy is a very big component of core inflation, probably impacts on about 30% of inflation, and then energy impacts on food and impacts on transport. And those, if you had energy, food, and transport, you're talking about almost 70% of the entire inflation basket. And once PMS price has gone up almost double, which is almost at same level with diesel, it's expected that inflation will tick up. So somewhere around 22 to 25% is where inflation would be. And that's not really a good thing, because inflation is just mathematics. It's last year index from this year index. So because of base effect, it's not going to be significant, because last year was already high. So if you say last year and this year, the rate will not be that significant. So what you need to look at inflation figures is the month-on-month inflation. Compare January to February, February to March, March to April. And what you will see is that it will start ticking higher as we go into second half of the year. So in that regard, it means that first half next year, inflation will be more higher. Will be higher than what that level would be this year. So the impact of the energy prices on year-on-year inflation, which is what the headline is, would actually be more pronounced at the first half of 2024 rather than 2023, just because of the mathematics of inflation. And that's what you will see on the month-on-month inflation. Subsidy obviously will increase inflation because you are seeing petrol price go up. The concern really now will now start to be where do we see energy prices, particularly crude oil. If crude oil price, mathematics says if crude oil price goes anywhere beyond $160 per barrel to 180, fuel price then is going to get to about 780 to 790. And then also is the part of what will be the impact of your landing cost, by importing fuel. And so anything around that 790, 780 per liter for fuel price, then inflation would tick up. The CBN has a target of 6.9%, and we don't think that's going to happen, anytime soon, even in the next 2 years for that. Now, what does that mean for the consumer? Not a good picture, and that's why for us, we're looking at what the government would do in terms of helping the Nigerians, reduce their effect on cost. And that's like, okay, with what you have gained from subsidy, are there going to be some sort of safety nets that you would have to use to support the Nigerians? And so, like I said before, from first half of the year, we had 4 million Nigerians that were pushed into poverty. And the estimate is saying that we're going to expect an additional 7 million Nigerians pushed into poverty. And let's look at the chart here, which shows sort of like the decile of Nigerians. We have the poor, you have the economically insecure, and you have others. A lot of Nigerians fall in the middle bracket, which is economically insecure. You're in the middle class, but anything can make you poor. It could be health issues, it could be loss of jobs, it could be, anything, because many Nigerians do not have enough safety net in terms of savings and in terms of stuff. So you have people fall into that category, and then there are quite a lot of people here that would sort of migrate into other countries. So we expect more Nigerians to fall into poverty this year. And safety net will now be the issue, because compared to other countries, I think Nigeria spends only 0.7% of their GDP on social benefits. And if you compare that to other countries, I think it's quite poor. And in terms of population that are covered, we have 19% of our population covered compared to other African countries that about 25% of the population is covered. And so then the question is, what's the outlook for this? So on the government policy side, like we've said, it's already clear they've removed subsidy. They're going to increase tax net. So what has happened is, so there's not going to be increase in tax rates, but they're going to bring more people into the tax net. And like we've heard about them trying to tax the informal sector. Businesses who have not been complying with taxes would also start to face fines. Just before the administration kicked off, there was a agreement between the Lagos State Internal Revenue Service and the Federal Internal Revenue Service on sharing of data. So it shows that the urban states where there's a lot of commercial activities, there will be a lot of synchronization between the state and the federal tax authorities. And so if you are defaulting on the federal side and you're paying on the state side, then you start to face fines. For projects, I think there will be government projects, but it will be more privatized. So we don't expect the government to do any major infrastructure on their own, apart from what they've gotten from the prior government. So you would see a lot of special projects funded by private sector, private parts, PPP, and concessions are going to happen. On the politics side, the good thing with what we have this year is that there's going to be a very good coordination between the federal and the state government. And that's because one of the strong points of this administration has to do with negotiation and ability to work with different states, no matter the parties. And you've seen that with states like Rivers, states like Oyo State, who sort of have a good relationship with the federal government. And so that would bode well, because what will happen before in Nigeria is when the another parties in the state, you see that parties that are not in that, states that are not in that party do not benefit from quite a bit of government advantage. But the other parties, there will be less protection for the consumer, for Nigerians, because you have a rubber stamp legislature. Before the announcement or the constitution of the new House of Assembly or the Senate, there was already discussion about who will be the Senate president, speaker, and whatever that party said is what we saw in the news. So you don't expect to see any opposition of the assembly in terms of what the government would do. While that might be good, it also has this implication in terms of protection of the Nigerians and consumer borrowings, taxes, social nets, and co. And then opposition also will be very reduced because we're going to have something like moving towards a sort of like a one party or a major ruling party influence on opposition. And you can see that already in terms of how discussions are going and negotiations are going on that side. For the economy, we've seen indication of exchange rates. The impact is that there will be high cost of doing business, right? Initially. So, and that will be from margins that are going to drop. Energy costs will impact on transportation. So for every company today, logistics will be a key problem. Your logistics costs are going to go up, energy costs will go up, and also cost of operating, salaries and co. Because it will cost you more to retain staff. Consumer markets will decline. More people will reduce their spending. There'll be more spending on necessities, and then you see quite a bit of down trading into cheaper alternatives on the economy. And then intervention funds will dominate. The government is going to stop or bring funds into different sectors to support the sector. But in terms of patronage, it will be quite political from what we see. Social welfare, I think it will be poor. I think we are moving towards a capitalist system. And what capitalist system does is that it's going to be expensive initially. And that's what you're seeing for energy. And so there'll be less social protection for the vulnerable. I've talked about down trading, and there will be quite a bit of stomach infrastructure and politically backed social programs. And that can be said because if you look at the next 2 years, there's quite a bit of state elections. And so those states will sort of get a bit of benefit from the federal government in terms of social programs to sort of support the incumbent government or the candidates running for election in those places. What does that mean for indicators? First is interest rates. Before I go into it, let me for exchange rate. Exchange rate would be at these high levels. I think it will be around what we think will be around 700 to 800 to a dollar. I mean 800 naira to a dollar. And the reason really is because of one, demand, and then one, majorly demand. That's what's going to drive it. Because what you then see is that there's going to be quite a bit of FX demand, and Nigeria already, because of our consumption pattern, still rely on imports. And so that demand picture sort of keeps FX sticky in terms of supply and demand. But supply will improve, more FX into the country, majorly from foreign portfolio investors, and also the CBN from crude oil receipts. But inflation will remain high, over 20% for the rest of this year up to next year. So the combination of inflation and exchange rate is going to impact on interest rate. So interest rate will still continue to be high. And what does that mean for business? Is borrowing costs. Your borrowing costs will be high because of the cost of funds for whoever is lending money is going to be expensive. So banks are likely to start repricing loans on borrowings. Economic growth, low base, it will pick up. Like I said, ICT, finance, trade, and agriculture are going to be the key drivers for the growth in the economy. So that is non-oil sector. Electricity, already what we are seeing is that tariffs are already high to support it. But then the key changer for the electricity sector is the what they call it, the liberalization in the sector, which happened prior to the new administration, that allows for discos or states to generate their own. So you have the likes of Egbin that can sell directly to an eco distribution and without going to the transmission company. That bodes well for the economy, bodes well for business, but doesn't do good for the middle and the poor, because most of them will not be able to afford that cost of electricity and will be phased out from the access to improved electricity supply, because it will only be for those that can afford it. Unemployment rate will rise, and that is mathematics really, because the real problem with unemployment is the fact that you have more people joining the job market than people getting jobs. So while that figure, unemployment rate, is for the government, for the business, I like to look at it from what are the number of jobs that are added, because unemployment is high level and is really for the government to handle. From the business, who I consider commercially viable are those that have jobs. And what you will notice is that we're actually having an increase in the number of Nigerians that are getting jobs. But because it's not as fast as number of Nigerians joining the job market, unemployment rate continues to go high. So the number of jobs added will increase, and we expect that to increase significantly between now and next year. Private sector will thrive. It's a private sector led market, so there's going to be more private sector involvement in terms of policies and infrastructure. Insecurity will reduce because of negotiation. One of the key things is the ability to be able to negotiate and handle all factions. It's going to improve in terms of insecurity. The only problem with social insecurity, and that's just because things are going to get expensive. People will not be able to afford basic needs. And so there will be that survival that might drive a little bit of insecurity in particularly commercial areas. And then cost of living also will be high, and that would affect on household, on business, and also on investors. So how does that impact on business, and what is the recommendation for small businesses in this period? So first of all, from fiscal policy, like I said, what I think is this is the best time to, now is the time for businesses to start putting more focus on compliance with government and also having tax consultants. And when I mean compliance, there will be a lot of standing in terms of your regulation, your licenses, fines, because government revenues is not just tax. There are also fines, levies, and fees that will come in, and that will be very very, very dominant this period. So having a very good compliance, ensuring that you comply with government standards is quite important. Also, lobby groups is the right time to start. Sectors need to start looking at creating lobby groups that can negotiate with the government. And if you look at it, what has happened since this new administration, you realize that there are certain sectors that are already making their case clear to the government, and they are getting that improvement. Now, this is not, when I say this is the time to expand, but not just expand, but to integrate. Like I said, margins are going to drop for business, but the gain is for those who are able to control their value chain from end to end. And what do I mean by that? If energy costs, if logistics cost is going to go up, instead of expanding location, it's time to start investing in logistics assets. A business who owns a truck will get more margins than a business who is renting trucks, right? And still expanding its revenue base. So integration is very key in a period like this. It could be supply chain. It could be investing in where your raw materials are coming from. It could be partnership with your existing players. Most SMEs would like to buy raw materials from anybody. You just go to the market and buy what's available. But this is kind of time to start building relationship with suppliers, having good contracts and determining price and payment terms, because cash flow is very important, and how you're able to reserve enough cash is very important in this period. Also, longer term financing, cost of borrowing is going to go up. One, because of interest rates and because of the risk-free rate. So it's time to looking at more longer term financing, particularly when you're trying to finance expansion or assets. Monetary policy, like I said before, foreign investment will be on the rise, but the key thing is that the execution is what will drive foreign direct investment. So it's time to start looking at working capital. And I've said it in my previous time that you need to start managing your working capital, how much cash you can retain, having better payment terms with suppliers and your people that work across your value chain improves on your margins, right? So you need to start focusing on that liquidity working capital management. Also, equity investment. It's a good time to start valuing your company, seeing equity investment, because as things are going, the rain will shine on particular sectors. And the moment you start to have the FDI rush into certain sectors, there's a bandwagon effect on the local investors. And then you start to see equity interest in particular sectors. And it's only businesses that are ready that would benefit from that. Restructuring and consolidation. Perfect time to restructure debts, consolidate your debts, and look at a better way to manage your cash flows from debt. And also, like I said, diversify your funding options. It could be grants, it could be impact funding, it could be intervention funds, but just ensure that you know all the funds that are available to support your business to be able to integrate well. In terms of economic policy, follow the money. When I mean follow the money is just know where your money is going to. Why do I say that? Sometimes it's not really about who is generating the cash. It's about who is making the money. So you could make 100 million in a month from sales. Out of that 100 million, you could have 50 million going to your distributor or going to your logistics partner, right? So when you understand follow the money means that you know who is retaining more of the money you are generating, and it starts to tell you what you need to be investing in, because margins will compress, but it's only those that are able to control their value chain end to end that benefit so much in an economy like this, because it's a capitalist system. Stay in cash as much as you can have cash. Stay in cash, and staying in cash also means have a better working capital management, right? A business is already a risky venture, and so it's not the best time to also start looking at investing in other risky venture. Have cash available to be able to take advantage of opportunities. It's a game of size. When you start going into a capitalist system, size matters. You can't stay small. Now, that doesn't mean that you need to be aggressive with spending, but it also means that we now have to start looking at collaboration, consortium coming together, 5 players coming together to secure a contract with the buyer, 5 players coming together to secure a trial with an exporter or with an export company. Right? We need to start collaborating or in that way, because it's a game of size. The more volume or value or size you are, the more you are able to dictate your margins and control your value chain end to end. Licenses, ensure you have the right license to do certain businesses, because like I said, a lot of things the government would do will be private sector led. However, the private sector or the companies who will benefit from that are those who already have good standing with the government. So just ensure that whatever you are doing or playing, you have the right license or you have the right regulation to operate in that space. Risk mitigation, know very well how to mitigate your risk. Like I've said, government risk, tax risk. They say tax avoidance is not a crime. Tax evasion is a crime. So you need to know how to arrange your books properly, right? In terms of ensuring that you mitigate your risk. Invest in infrastructure, value chain. Cost of assets are going to go up. So what that means is that the earlier you buy an asset, the more advantage you are. If I buy a truck today for 10 million, somebody buys a truck next year for let's say 15 million, I will be able to play the market, dictate better pricing with buyers, and also improve my margins. So when you get the right financing, start to look at investing in assets, because you would obviously be at a good advantage then. And then when I come to others, policies, insurance, governance structure, very important, because like I said, when the rain starts to shine on certain sectors, which will happen, it's actually those that are ready to catch up in that, to catch the bug. We have a lot of viable businesses in Nigeria, but we do not have a lot of investable business. And we need to know that if you're an SME, is your business, well, might be viable, but is it investable? Governance structure, what kind of structures do you have? Processes, integration that helps you stay profitable in this period. Impact and sustainability. It has its benefits, apart from the fact that you are doing good for the economy, but it also helps you to reduce your funding costs, because there are access to funding if you are creating impact. Most people don't know the value of what they are doing from an impact standpoint, because for them, you're just doing business. You need to start to understand that. Focus on enablers, right? There's a difference between a tech business and a tech-enabled business, right? And we are now moving towards that direction, where tech-enabled business are the ones that are the shining lamp compared to tech business, because tech is really not a business, it's just tech, right? You need a business before you can enable it. And one of the good things is, if you already have a business running, start to invest in technology, because you then become more viable. Because one, you control your business, and then you just have tech that sort of takes your business to the next level. KYC, like I said, understand your partners. Don't just go into the market and just buy from anybody without having a relationship with your partners, because it helps you very well. You could get orders that you cannot afford, but if you have a good relationship with suppliers, with partners, with providers, you'll be able to deliver the business without putting money down on the table. And so you have to start building those relationships with people that you deal with across your business. And so that is it for my presentation. I think I've been able to give a high level of the impact on business from the politics standpoint. And after I will be open to taking questions. Thank you so much.
Thank you so much, sir, for all of that. I will be handing over to my colleague, who will be handling the Q&A session. Thanks.
Thank you so much, Mr. Kaede. That was extremely interesting and informative. I think everyone's questions to a large extent have even been answered, but just for the sake of emphasizing on some of the things that our participants and SMEs at large need to be aware of, we'll still ask the questions, and you can just answer them and reiterate some of those points. If you do have questions, please put them in the chat. That way we'll be able to organize the Q&A portion more effectively. So if you have a question, just write them in the chat and we'll read them out. We also have a couple of questions that we have prepared in-house that we'll be asking as well. So the first question in the group chat is, how can I change my pricing strategy to adapt to increased inflation and increased poverty?
Okay, so the angle. Let's walk back. Pricing is an outcome. The real goal is you are trying to maintain margins. So the only reason why you want to increase your price is that you want to retain margins. So rather than ask the guys, how do you change pricing strategy? The question is, how do you retain margins? Because you might, in retaining margins, pricing is one angle to it, right? But there are other angles to retaining margins as against increasing pricing. So that is the best angle to look at it in a period like this, because there are many things that you cannot control. You might, I mean, like I said before, people are poor, more people will be affected. Just sort of saying, okay, my price is now higher by 100% or this might not be the best option, because you don't, it depends on where you play. You might not be playing necessity space. So if I focus on it from an angle of retaining margins, it explores or it broadens my options on how I can play. And like I've given power example, one is cash flow management. Very good way to retain margins. If I can earn 100 naira without putting my money down, right? My margins are higher because um, I've been able to do that business without my money. And that's if I have a good relationship with my suppliers. Two, if I invest in certain assets that takes more of my money, I can retain my margin by reducing my operating expense. And I can reduce my operating expense by investing in particular assets, right? So if I, for example, if I look at my business and I say I'm paying, let's assume I'm a bread company, and I realize that I am paying a transporter 30% of my sales, right, to transport the bread to my buyer. Then the only way to retain my margin is to buy a truck, right, or to buy a bus, because what that does is that I will reduce my operating expense maybe by 40-50%, and I'll be able to maintain my margins. So I can do that not without increasing my price. Another way is that I can change or be more efficient with my energy. That's another thing you can use to retain your margins. You can be more efficient with energy. You have to play the game. Which one do I want to use? Diesel, petrol, electricity, right? Or do I want to partner with players? For example, I've seen areas where 5 businesses have 5 generators, and when you combine it together, everybody has excess that they don't use. And then these 5 businesses come together and use 2 generators, and they are able to reduce their energy costs significantly. So investing in things like, even it could be light operating hours, timing, and co can help you reduce your energy costs and maintain margins. So that's another option. What else can you do? Longer term supply. What else can you do? Working capital management. Now, once you explore those options and you get it well, you might not necessarily need to increase your price. But if you explore those options and you still have a margin problem, then you can now go to the top line. How can I then play my price strategy? Before you go into increasing price, you can think about volume and product differentiation, right? And we have businesses that have done that, particularly the consumer products, who have created sachets instead of tin, right? It's a pricing game, right? Some people have tried to lock in buyers for a longer term with a little discount. It's also a pricing strategy, right? Some people have also been able to create different products, different offers for different market class. It's also a pricing strategy. So that is the best way to look at it in a period like this, because you might just increase your price and lose the entire market. So they say sometimes it's a period where you might also have to sacrifice margins for volumes, right? Because the more volumes you can do, the more advantage you, the more competitive you are, and the more you are able to scale and also integrate your value chain, right? Perfect example is this. Let's assume I'm a palm oil user. I, I buy palm oil from a state and bring it to Lagos, right? And I'm selling it for 1,000 naira, right? But at 1,000 I can do maybe 1,000 kegs of palm oil. But if I'm able to secure at 900, I should be able to do 10,000, because I've been able to get a pricing game. So I've reduced margins for volumes. But what I've done is I've been able to triple or quadruple my revenue. Because of that, I will be able to invest in certain assets. I don't need to start looking for a truck or a bus to bring my palm oil from that state to Lagos because I then own it. So all those costs of transportation reduces significantly. And in the long run, I will go back to that my margins. So that's the best way to play the game in a period like this. Thank you.
Thank you very much. So going to a question prepared by us, there are different ways that different industries react to economic shocks, to change in administration. But then we also know that there's some industries that no matter what happens, they still maybe not flourish as much, but they still keep going. They are less affected by these changes. So what are some of those key sectors that you think tend to survive external shocks?
Okay, thank you for that. Let me go. So typically, sectors that are defensive. So obviously, if you play in agriculture, that agricultural sector will be less of external shocks because there's a case where where there's a food security problem. We cannot meet our demand. I was reading something recently about the fact that we import stockfish, right, from is it Norway or Greece. We can't meet our demand. So any sector that has a a supply deficit where you have to, is it supply deficit? Yeah, demand deficit where the demand is higher than the supply will be defensive. Now, but that's a sector. And I would also want to put this to entrepreneurs today who are listening to me is that ignore sectors. Today, we are not in a sector position. We're actually in a values chain position. Why do I say that? I can be in a consumer sector, but be a transporter in the consumer sector. Am I really a consumer player? No, I am actually a logistics player, right? I can actually be in the energy sector and be sort of like a procurement guy. Am I really in the energy sector? Yeah, kind of, because whatever happens there affects me. But I can also be called myself a procurement player. So value chain important because while a sector might be great, where you are and how you are positioned in that sector, you might still not benefit from that sector, right? So some sectors are, typical example is salt, right? You say salt is fixed, there's no risk. It's just that it cannot grow. People will always buy salt or cement. There's no risk, cannot always buy cement. However, the difference is that even if people will buy cement, even if the price is stagnant, the cost of producing it doesn't mean that it will not go up because bagging will go up, right? Transporting it will go up, but you might be able to transfer that price. So if they transfer the price up, who benefits, who suffers? The guy who might be supplying the bag, his price might not change, but his own cost of production might change, right? But the guy who is producing and selling to the customer might be able to transfer the cost. So it's actually about how you are positioned in that sector. So there's the need to do that internal review of your business. Where am I in this sector? How well am I defensive in that sector, right? Am I one of the beneficiaries of an higher margin or a positive in that sector? And how well do I now want to play? So that is where things like value chain integration comes in, forward integration or backward integration.
Thank you very much. Okay, so the next question is, there are obviously many balls that companies now need to juggle to be successful. What will you recommend that SMEs especially should focus on?
There will be, first is, which I've explained, first is structure, governance. So governance and compliance, very important. So I would say every SME needs to be on that side because, like, I would tell you one thing. One of the worst situations to be in Nigeria is to be an SME for long, because the variable or the factors that come to play in this country does not favor you as an SME. So the earlier you can get out of that SME bracket, the better you are. And how can you get out of it is to ensure that you have structures that takes you out faster. And what I mean, that's why I say scale is important. Give you an example. There are some big businesses that will borrow money lower than the government, right? Doesn't mean that they can take financing. And that's why I said, have a good structure that puts you in a good position so that when the capital comes in, you are one of those people that are attractive to the capital and you can get faster. Two is that integrates, because one of the things that takes you away from an SME is how integrated in the value chain of your business you are, right? I don't want to invest in a farmer. I want to invest in an agribusiness that has a control from the farm to the consumer. Doesn't mean that he owns it, but it might mean that he has relationships, right, or collaborations from end to end. You understand? Another example is I don't want to invest in a retail company. I want to invest in a retail company that understands or has a good control of its supply all the way to a supermarket, right? So that is what takes you quickly from that plan. That's what you need to be focused on. Governance, things that will take you away or that reduces the risk of being an SME from you quickly is what you need to focus on. Governance, compliance, value chain integration. If you get those three right, you would do fine in this economy.
Thank you. Okay, the next one is, how do SMEs go about accessing long-term financing in an environment where investors are investing less?
Investors are not investing less. Investors are just more cautious about where to invest. And the issue with investors today is risk rather than opportunity. And that is what we need to start looking at. Most SMEs, when you are pitching to an investor, you are selling opportunities. But the question is, don't they know? They know. Is agribusiness attractive? Yes, it is attractive. Is this sector attractive? Obviously, it's attractive. I know it's attractive. So why are people not investing in it? Why are people not doing it? Is the risk. So to secure long-term financing, focus is risk mitigation rather than the opportunity. That's the focus. And that is how people have been able to lock in fundings. And what I say risk mitigation, what does an investor want to see? They want to see their money end to end. If they can't see their money end to end, then your risk is high. They want to see how their money goes from the where the supply is coming from, how it's transported to the factory, how it's produced there, how it's taken there, and how it gets to the consumer. What does that mean? I have a contract. That's one thing. They've showed that, okay, you secure your money. There's viability of money. Oh, I have a partner that is bringing it to me. There's a document to back that. It shows that you've secured that end of it. I have an operating company or a technical company that does this for me. Once you bring all those together, there's no how you will be able to secure longer time financing. Now, does it mean that you have to do all of that? No, and that's the angle of consortium. Typical example is if you take examples of longer time financing in Nigeria and in sectors that are just coming up and how they've been able to do it. The off-grid energy sector or the renewable energy sector, it has attracted funding, longer term funding, 10-year, 20-year funding. How did it happen? B2B, where there was offtake contracts that were backed. There were technical operators that were in the same transaction, right? There were suppliers that were in the same transaction together. All together came as a consortium and did what you call a project finance. And before you know it, the money comes in and everybody gets his own share of the money to invest in his own type of business, but all coming back to the same pie because the investor can see the money end to end. So always ensure that when you are selling longer term financing, opportunity is not as important as the risk because they know the opportunity. So sell risk mitigation. How is your risk mitigated? And how are you able to ensure that they can see the money end to end? If you do that well, you will be able to unlock longer term financing for your business.
Thank you very much. So another question is, business owners tend to focus when they're using metrics to measure their performance and competitiveness. They do tend to focus a lot on sales. How much are we making? How many things did we sell? So in this time of change, of transition, what are some of those other metrics that you think business owners tend to ignore that may still tell a story?
Yeah, thank you for that. The major thing is margins. Margins. Before I scale, the question is always from the amount I make, how much do I retain? That question could be gross margins, it could be operating margins, it could be profit margins. That is the metrics you want to focus on from your financial standpoint, because it also guides how you expand. If I make 1,000 naira and I'm keeping 15 and I'm retaining 500, it means if I do 2,000 naira, I will retain 1,000. However, if I now invest, ensuring that out of that 1,000 naira I make, I'm retaining, let's say 700. That means all I need to do is to invest in a way that even if I just do 1,500, right, I've been able to still, I will achieve almost similar to even to somebody who did not invest that way, but is going to 200. So margins, just focus on margins. How much of the money you can make, it's more important than how much you're making. There are businesses that do not have access to sales. They are not the ones selling, but behind the scene, they are the ones making the most money. And you see that a lot in consumer goods, hotel, hospitality. You can have 1 million sales, but when you look at it, it might be your energy supplier, it might be your distributor, it might be your supply chain who is making most of your money. So that guy is actually one of the biggest players in that sector. It could be the bagging company. So margins is the key thing to focus on now. It guides how you scale your revenue, because most people just focus on expanding. Expanding means, oh, because I have one shop here and it's doing 1 million, then I want to have 10 shops and these 10 shops are doing 10 million. But then you have 10 shops doing 10 million, and then some people are making more money of you, and then you realize that your margin is still the same. So that's not scalability. That's not economics of scale, because what that means is that for every one addition of sales you make, you're basically still maintaining the same thing. You're not scalable. Scalability is how am I able to grow and retain more money, right? And that's scalability. So if you focus on margins than sales, it helps you know how to expand, and it makes you scalable. So this year, this administration, this dispensation, margins should always be your focus, right? Nobody says don't focus on sales, but always ask yourself, with your guys working, your gross margin first, and then your operating margins. It helps you know how well to reduce your cost. Sometimes it can make you know when to transfer some costs from variable to fixed. It can make you know when to take some costs from fixed to variable, because it helps you to control your productivity. Apologies for that.
Okay. So thank you very much. I guess the final question to round off the Q&A would be, and I guess this is a lighter question. What industries are you backing on? Are you backing in this new administration? What industries are you banking on? What industries are you excited about the potential that they have right now? Or it could also be what players in the value chain, because you've said it's not a sector thing now, it's a value chain industry. So what players in the value chain are you excited
Okay,
about?
so the thing really is, I'll bank on the sectors that have the problems, or where the problems will be fixed, right? Oil sector, for example, I'll say downstream, because that's where there's been a problem, and with removal of subsidy opens up the sector. Infrastructure, obviously, big problem. Energy, roads, transportation, it's a big problem because it was affecting even cost of doing business and sales. That's a very big one. Agriculture does not necessarily mean farming. Even food is part of agriculture. So if you're in the food segment, you can also call yourself an agricultural company, because you might have to start investing backward, ensuring that you control it. So it's also a sector to play. So I don't want to be, to be specific, because the truth is there's opportunity everywhere. Just anywhere the problem is and the policies are fixing is where the opportunities are. Energy, agriculture, infrastructure, logistics, downstream oil and gas, and then also food. Food will always be big. One thing you always have to ask yourself is, and that's why I always want to use this opportunity to also advise entrepreneurs, always look at the data. The data never lies. And data is, first of all, economic data. Second, data is country-specific data. Why do I say that? If you go to the Nigerian Bureau of Statistics today, you will see the consumption of Nigerians, data on consumption. It tells you where it is. Lagosians, they'll tell you Lagosians spend about 1 trillion naira eating outside of their house. That's food business. But in that food business also has agriculture. In that food business also has storage and transportation, right? Because these people are consuming, right? They tell you Lagosians spend maybe 300 billion on drinks, right? In that drink business, there's packaging, there's raw materials, and there's school. Follow the numbers. It tells you the consumption pattern. What are people eating? What are people consuming? What are they investing in? You can also look at it from VAT. When they show you the VAT, they show you the VAT per sector, and it also tells you where the opportunity is, right? You start to see VAT growth in hospitality. It tells you that that's a business to play. Now, from a business standpoint, because most of us that are here already have a business now, and we're not making it doesn't mean that, oh, I have to now start doing another business called opportunity. It just makes you know, how do I key my existing business into that space? If I see value in hospitality and I'm a food player, or I produce water, what does that mean to me? Should I start securing deals with hotels, with restaurants? Because that's a big market for me, rather than doing the B2B, the B2C, or people buying one bottle from me. So follow the numbers, follow the data, and then you will see where the opportunities are, because it evolves, and it's also the opportunities in every sector, because every sector in Nigeria today has a challenge, has a problem, and is whoever is able to fix the problem in his own value chain that will benefit in this economy.
Thank you. So I guess finally, you can just give us maybe a summary or a nugget that you want everyone to remember from your presentation today.
Okay, so what I would say is Nigeria has a lot of opportunities, and it also has a lot of risk. As a business owner, you need to ensure that your risk is mitigated while the opportunities are there. It's not a time to be pessimistic about Nigeria. It's actually a good time to be optimistic about the country. However, it's also a good time to ensure that you are well positioned. So positioning is more important than the opportunity itself. How positioned are you to the economy in this time is quite important. So let's not be pessimistic, let's be optimistic, but let's be cautiously optimistic, right? Let's understand what we are doing, and we can't be doing business as usual, which is just dealing like you're doing your everyday thing, you buy, you sell, and co. You need to be now cautious. You need to be more detailed about your numbers. You need to invest in those space. It could be advisors, it could be consultants, it could be yourself, it could be you investing in trainings and capacity. You need to start looking at numbers. If you don't do that, you don't understand margins. And like I also say, because I'm talking too much on this part. It's meant to be a short brief, but I like to explain it well. You need to invest in numbers. There's profit and loss accounts, and there's cash flows. We can't always be looking at things from a P&L perspective. Cash flow is king. Cash is king. So also understand cash flows. Ask yourself, do you know your free cash days? What is the time frame between when I get money from my buyers and the time frame between when I pay my suppliers? How can I improve on that? If it's negative, then not good. If it's positive, it's good. Always have certain metrics. Now you have to sit down today and say, what are the key metrics for my business? How can I ensure that I'm getting these metrics on a periodic basis for my business, right? We need to invest in that. We can't keep doing business as usual where we just buy, sell, and go. No business as usual. Invest in capacity, invest in data, invest in analysis, and invest in trend, and also invest in positioning, structure, financing, data management, relationships, and collaboration will put us in a better picture and make us more competitive where we play. And that's my advice for every entrepreneur. Be cautiously optimistic and ensure that you understand your business end to end, and ensure you always follow the money, always important, and you will be very good in this economy. Thank you.
Thank you very much, Mr. Kayode. So I'll hand over to Oyindamola now.
Thank you so much again, sir, for joining us. It's been a really enlightening session. I know we've all learned a lot, especially with how detailed your slides were. Just for everyone in attendance, we will be sharing all the slides or the slides that you viewed today. So if you weren't able to take notes or you did join it a little bit later, no worries. You will get the slides and be able to utilize them to your advantage, or use them to your advantage, rather. If you did not register through the registration form, just to ensure that you still get the slides, please put your email addresses in the chat. I see here that somebody has already done that. This is just if you haven't registered. If you registered through the Google Sheet, then you will just automatically receive the slides. But if you didn't register and you would like to receive the slides, please just put your email addresses, and then somebody will be taking those or making note of them as well. Mr. Omoshiri, thank you so much again for joining us. Thank you so much again for joining us. For the people that did join halfway, no worries. Again, like I said, not only will you receive the slides, but we will be posting this to our YouTube. So if you feel as if you need to see the session again, you want to have a look again at the session, we will be posting it to our YouTube channel. That's Pro Mutual Consulting on YouTube as well. You can go there. Not only will you get these this session on there, but you can actually watch our past sessions. We've had some very enlightening sessions in the past, some on tax and branding and things like that. So if you would like to look at our past sessions, they are there as well. Just for everyone who doesn't know, we do have these sessions every single quarter at the end of the quarter. So it is now July. This was for Q2. The next one should be in September, end of September, maybe the first week of August, but we will be notifying everybody about the next session as well. Thank you again so much for joining us. We are seeing your comments. We appreciate them. I hope everybody has a great weekend, remainder of the weekend, and that you enjoy the rest of your weekend, your week as well. Just as a aside for people who are now seeing something on the screen, not sure what it is, these are our financial advisory services. So if you do feel as if you are in need of any services from us, you can just contact us as well. Timmy Top, I hope you're still in the session. Please just drop your email address as well so that SMEs can contact you specifically if they would like any of these financial advisory services. I think one thing that I learned or gained really from the session was the importance of understanding your environment, the importance of data gathering and making sure that you're well structured. These are all services that we can provide you with. As you can see there, corporate governance structuring is there, as well as research and data analytics. So if you are listening to the session and you're feeling like, well, I'm an SME and I would like to, take more control of my value chain and things like that, but you don't know where to start vis-a-vis research-wise, we can actually help you with that as well. So once again, thank you for everybody who joined us. We really appreciate it, and enjoy the rest of your week. I will be signing off now. Thank you.